Hi, everybody. Thanks for stopping by. My name is Carmelo Pernesti, and I'm the owner and broker here at Nine Line Realty in beautiful St. Petersburg, Florida. Today, we have with us Brooks Becker. He is one of the amazing loan officers that we work with here at Pioneer Mortgage Financing. So with that, Brooks, thanks for stopping by.
Carmelo, thanks for having me. I'm happy to be here and help educate about the loan process.
Awesome, man. Awesome. So today, what I really wanted to kind of get into with you today, Brooks, was what are the first, like a lot of the times I'm working with VA qualified individuals, whether they're active duty service members or veterans. A lot of these guys, they're asking about what the VA loan is. Can you kind of give us a quick introduction on what that is?
Absolutely. So the VA loan is designed for our military families. All right. So part of that is 0% down. So you don't have to come up with a down payment when you use this VA product. So when you go to get your loan, these are backed by the government, and you can go up to a 50% debt to income ratio. What that means is if you take your monthly income, cut it in half, that's about the amount that you can have going out of your household income every month. And part of that's going to be your mortgage. So if you imagine that if you make $10,000 a month, 5,000 can be sent towards debt. With that being said, your mortgage, you don't have to put any money down. You typically have a little bit higher payment because of that. But the benefit is when you move around so much, which a lot of our military families do, they don't have to worry about selling an older home because they have this advantage.
Got it. Okay, so for example, if one of our VA service members, say they have an annual income of say $75,000, how much house could they buy?
Sure, absolutely. So with $75,000 as your annual income, if you have no other debts, let's focus on that. If we stick to mortgage only, so you could probably buy around in today's market around a $375,000 house, 0% down, and you imagine a mid-six range of rate. In part of that payment is going to include an escrow fund, which is going to have your taxes and insurance. So
Okay,
not only do you have to pay your principal and interest payment, you'll have to pay your taxes and insurance. That'll be included in that debt to income ratio.
got
And
it.
that'll normally get you to be around $2,800 on a $375,000 home purchase with 0% down in today's marketplace.
Okay, great. Now, when people are talking about 0% down loans and mortgages, there's closing costs that are associated with those mortgages or purchasing a home in general. Is that correct?
Absolutely. So when I say 0% down, I mean that's a down payment. Now, to purchase a home, uh, you have to come up with an investment, right? An investment to purchase that property, and that's going to include building that escrow fund, which your escrow fund is going to be your taxes and insurance. You have to pay that upfront, and then you also have lender fees and title fees. So the title company gets paid to make sure that you have the claim to the property. You have fees associated with inspections as well. And all that put together for your closing costs are going to be between 3 to 4% of the loan value.
Got it. And some other prepaid costs, we're talking about, maybe appraisals. An appraisal can probably run somewhere around $500 to $600 at the time that the appraisal is needed. Sometimes I know that you can pay that fee upfront, or sometimes you can pay it at closing. Some of the other fees that I know that we associate with home purchases are inspection costs, and inspection
Absolutely.
can cost anywhere from say about $500 to maybe $800 when the inspection is needed. So there's some extra, prepayments that are associated there with purchasing a home as well.
Absolutely. So inspections, obviously, like you said, can run, between as low even as $150. The reason you get these inspections, first, you want to know that the home that you're buying is a good investment. If it's got termites, you want to know about that. But also, because you're going to put a mortgage on this property, the lender needs to make sure that the asset that's going to be secured by this debt is a has value and it's not broken in any way. So there's something called a 4-point inspection. What that does is make sure that the plumbing, the electrical, the roof are all in good working condition, and it makes it a livable home for you. So that inspection has to occur in order to get financing on the property. Even if you live down here, there's also a wind mitigation that has to be done to make sure that you maybe get that discount on your home insurance.
Exactly. And there's one more that I'm thinking of, and I believe it has to do with termites. If I'm
Yes.
not mistaken, it's called a wood destroying organisms, or a WDO inspection. Is that right?
Yes, absolutely. So you got to make sure that you don't have a living organism in your home that destroying it. So a lot of times the lender wants to know that it's not an infected house.
Awesome, awesome. There's a lot to learn there. When you have an inspection or a termite inspector come out, definitely, try to take the time and, get with that inspector, ask a lot of questions about what the different types of termites may be, because sometimes that is something that we do have to deal with in Florida.
Absolutely, absolutely. A lot of times with termites, it's kind of interesting to you can live in a home and not know it has termites, but the moment you get an inspector come out, they'll point out things that you, especially living in it, that you never noticed. I
Absolutely.
mean, the little wings that they leave when they
Yeah,
decide that your house is tasty.
absolutely. Absolutely. So, from a lending standpoint, right? If we're going into we're starting to put offers on some property. What are the kind of things that you might think would help a offer stand out for a transaction, or for a seller, for example?
Okay, so looking through it from the seller's perspective, if someone wants to come buy your house, someone knocks on your door and says, "Hey, I'd like to buy your house." You're not just going to say, "Yeah, all right, that sounds good," and sign over a contract. You need to make sure that they're able to buy your house. And in order to do that, we do something called a pre-approval letter. What this is we verify your income, we verify your old tax returns, we verify that you have funds in the account in order to make those closing costs and the down payments. And then we take all of that, we check your credit, and we run that through an automated underwriting system. All right. So the automated underwriting system will be put against the guidelines by the government-backed loan. So if you think of Fannie Mae and Freddie Mac, who ends up with these loans. So we underwrite them based on those guidelines so that when you come to make an offer on a home, you bring that pre-approval letter and it basically says, I am qualified to buy your house. Now, if you're the seller, that makes a lot more sense than just someone coming along saying, yeah, I'd like to buy your house. It's
Yeah.
guaranteed versus not.
And that really just kind of, puts the seller at ease a little bit, to let you know that you've done your due diligence. You have taken all the necessary steps to make sure that when you put your offer in, as long as it gets accepted, it will make for an easier closing process. Um,
And okay, it
oh, go ahead.
also gives you the advantage as the person giving the offer to it gives you the competitive advantage. If someone comes in for a $500,000 house and said, I'll pay 600, but you come in and say, I'll pay 450, but I'm guaranteed. Well, the highest offer doesn't always get accepted because the seller wants assurances.
Yep. And there's a safety in that offer also with that pre-approval.
Absolutely.
Okay. So what about sometimes when I'm dealing with a client, and I really want to make sure that the seller knows for sure that there's a lender involved. And even though we've already shown our pre-approval, sometimes we hear that it's a great piece of advice to have the lender sometimes call the seller or the selling agents themselves, to just double tap the idea that the seller will be protected in the transaction, and that the lender is fully aware of all the financial pieces that the buyer has to offer.
Absolutely. And that's going to give you the advantage of working with an agent um, who's aware of how to do these things. Buying real estate is not a textbook type thing. It's live, it's in the world. how you do it and who you work with in order to get your real estate secured makes a difference. And if you have a real estate agent that hold can guide you along the path and put you in situations that you have a competitive advantage, that's going to work best in your situation. You have a lender on your side that's going to go the extra mile to keep you informed, to build a mortgage plan for you so that you are confident with your purchase, and then goes and speaks to the seller side of it, because that's what we want, is we want to assure the seller of what's going on here. That's why we did the pre-approval letter. If they go and call the seller's agent to let them know, hey, we are pre-approved, this is what they can do, we are ready to go, that'll give you, the buyer and everyone involved in the transaction, a smoother experience.
Absolutely. Absolutely. So, hate to backtrack, but earlier I just thought about this. When we were talking about appraisals, is an appraisal needed for every transaction when it involves a mortgage?
Okay, so this also kind of touches back on the inspection side of things. The lender needs to know that the debt that you are going to be securing has an asset that is worth that.
Got it.
Now, typically speaking, when you go to purchase a home, you might be putting 20% down, or you could put less money down. When you put more money down, the lender might give you something called an appraisal waiver, where you have so much equity at the beginning that they will give you a lenience and they don't have to worry about that appraisal anymore. And that could be a $650 savings. So if you're going to buy a $400,000 house and you're going to put $200,000 down, you have 50% equity. That lender doesn't have to worry about that home appraising. They can clearly see, wow, that home is probably worth every bit of 380. If something were to happen and you not be able to make your payment, that lender would be able to take the home back and not lose money. Ultimately, that's why they would give you an appraisal waiver, because they can verify that home's value without an appraisal being done.
Exactly. So never the scenario that we want to happen. Of course, we never want somebody to go into the foreclosure process, but this is one of the ways that banks make sure that they're secure with the investments that they're making, and they're making an investment in you as a home buyer. One more question when it comes to the VA loan, and I guess you could use this for any kind of government-backed loan, such as the FHA loan, but for VA loans, what are the minimum credit requirements at this time?
So the minimum,
If you
hold
don't
on a
have that
second,
one, it's okay, don't worry.
we're gonna have to audit that one.
That's the cool part of having it recorded, because you can just take it right out.
That's a great question. Give me a second.
Oh man, I threw you for a curveball there.
Yeah, you're getting specific. VA credit score.
Oh, and then the next one will be, are you allowed to have two VA loans? And if there's a cap.
Got it. Okay, so we're at 580. 520, VA loan at 520, determined there's
Damn,
no
520. I remember 580 being a number, but dang.
living expenses are considered. There's no minimum credit score required. This isn't right.
That would be literally the biggest text popping out on YouTube saying no minimum credit score required to purchase VA loans.
No joke.
And
Except
we
for
get
minimum
all the
credit
phone
score.
calls. We'll probably deal with a lot of people who are not qualified.
So these guidelines do shift, obviously.
Yeah.
Let's be safe and do 580, because these
Okay.
guidelines do shift, and they are I can touch base on the lender side of things, because some lenders put guidelines on top of what the VA requires and what Fannie and Freddie Mac are. And if they're in-house lenders, they can put more guidelines on it. So I'm going to go with 580 for that reason.
Okay.
Is that acceptable?
Yeah, cool.
Okay. And then what was the second question?
Can you have two VA loans out at once, which I'm pretty sure you can.
You can.
And if there's a max allowable loan limit. with those two or with one or whatever.
Got it. So that's going to come back down to your eligibility.
Okay.
Well, not loan amount.
This is a
Not loan
max loan
amount.
amount still.
What's that?
Is there a max loan amount still?
You know, I think Trump got rid of that.
Yeah, I remember, but I don't know if it came back or not yet. I'll tell you what, the whole
Yeah.
beginning of that, before we kind of broke it up, that's a good recording.
Was it? I thought
Yeah.
it was. I felt we were flying.
I think it was good because people want the information fast. We stuck to the questions. We did pretty good. So I mean, I think that's a good take.
Yeah. So I'm showing from the Veterans United that max loan for 2022 is 647,200.
Okay. So you say about 640 for a max loan amount. Now, is that also
About
if you do, say you do a VA loan for 300,000 and then you want to do another one for another 300,000, does that qualify still? Your eligibility still does not run out. So
right.
yeah, and the next piece will cover that. So the lowest credit score and the amount of eligibility, and if you can have two loans out at a time.
Yes, perfect. Let's do that.
And then can you turn one of those into an investment property?
Okay. Yeah, okay, that's gonna be good.
After a year.
After a year, you're good.
So yeah, I'll ask, right? And then I'll let you kind of run with as long as you lived in the home for at least a year, you decide to move out, you may turn that property into an investment property. As long as it's not going to get you in trouble for saying that.
No, it won't get me in trouble.
Okay.
Thank you though for thinking about my
Yeah,
compliance.
obviously the whole goal of this is to put it out to as many people as possible. And the last thing I'd want is for you to say something you shouldn't.
Yeah, Pioneer Mortgage.
Yeah, you're screwed, man. I'll have to make sure I have the editor take this part out for sure. All right. So Brooks, the other question that I had was regarding credit scores. For a VA loan, what is the minimum required credit score?
That's a great question. So guidelines are due to change as this video ages. However, right now we are looking at a minimum credit score of 580. Now, depending on your lender, other lenders can put guidelines on top of that. So you have to decide on who you want to go with. And that's why it's important to maybe check with a lender or two.
Got it. And another thing about the VA loan is, if I'm not mistaken, there is a maximum allowable loan limit or eligibility, if you will, regarding how much home you can purchase with a VA loan. Can you touch a little bit on that?
Absolutely. So when you go to purchase a home, you can actually, with a VA loan, you can actually go up to a $640,000 loan limit with your VA benefits.
Got it. Got it. And once you're living in that home and maybe you decide that it's time for you and your family to maybe move on to another home or buy a second home, maybe even make that one an investment property. Is that something that's allowed?
Absolutely. So if you decide after living in your home for a year that you need to upgrade or just life changes and you need to go purchase a new home, if you have not spent that full 640,000, you can go spend that money or some of the remainder on a new property. That does not mean that you have to go back and change that loan on your old property. You can keep that VA loan on that property. You don't have to change it.
Got it. Got it. Got it. Awesome. So you can have two VA loans out at a time. You can even make one of those an investment property at some point. You're getting 0% down payment for a loan. Of course, there are some closing costs associated with that loan. You have a 580 minimum required credit score. I mean, it sounds like for veterans and other service members, the VA loan's kind of like a no-brainer, if you ask me.
Absolutely. I think it's a good product, and there are many products out there. The reason they exist is because it meets someone's needs, and the VA does a really good job of looking out for our vets.
Absolutely. Absolutely. Brooks, was there anything else that you wanted to maybe touch on about the mortgage industry or financing or anything like that regarding home loans?
Absolutely. So when as we've kind of talked about, as you can see, there's a lot that goes into buying a home, not just picking one out and saying, I like that one, let's go figure it out. Who you work with matters, especially today. Right now, being at the end of 2022, everyone knows that the rates are going up. And what does that mean? We're thinking that the real estate market is slowing down a little bit. Sellers aren't getting as many offers. So the real estate agent that you decide to partner with for your home purchase and the lender that you choose becomes more important now than it has been in the past. And the reason why is because your real estate agent can actually request and negotiate for credits at closing. So if you're not a VA, imagine coming to the closing table with less money down because your agent requested credits towards closing. If you don't like your interest rate, you can actually request credits to go to the lender to lower your interest rate as well. And those are all negotiating tactics that are actively used right now to get the deal done.
Awesome. And touching on that, when you're thinking about, rates right now and what you can do to try to lower those rates, you said a little bit earlier, we're about the 6% range. What is something that we can do maybe to lower the amount of interest rate that we're paying? Is
Absolutely.
something called points, if I'm not mistaken.
Yeah, points. So you very simply, if you put more money down, you can actually lower your interest rate. And cash right now would lower your interest rate, it'd lower your payment. Or the other way around, I've even seen it where if someone wants more money at the closing table, they can actually bump up their credit a little or their interest rate a little bit and take that money to put towards closing costs. Why would you do that? Basically, it fits your needs. If you need a lower payment, you can put more money up front. If you have less money, you can raise your rate and get a credit at closing. Which works? That's going to be dependent on your needs and ask your loan advisor, hey, I'm thinking about doing this. And then you can weigh the options because right now, if you need
It's
we
okay.
broke it. What I was going to say basically is if you can get a credit towards your interest rate, you have to determine the time value of that money. And
Got
if
it.
the payoff period is in 5 years, well, what you're technically gambling on is if the rates will go up in 5 years or go down in 5 years.
Got
Right
it.
now, we're seeing mid sixes touching seven. So basically, if you want to lower your rate, you're planning on being in that home and in that mortgage for quite some time.
Got it.
If the rates drop, you can always refi
Got it.
and lower your payment in a future date.
Nice. So, um, as a real estate agent, I know that sometimes, especially in markets like these, um, when sellers' properties may be sitting on the market just a little bit longer that they are comfortable with, a lot of the times to get the deal done and an offer accepted, and not only accepted but closed, the buyer will sometimes and the agent will negotiate some seller concessions. And what those are is seller concessions are basically money given to the buyer by the seller to help with things such as closing costs, maybe buying points, maybe some prepayments, all of those things that can really just not only help the buyer, but really help the seller out as well to make sure that they're getting what they want out of the home transaction or home purchase or sale, and really make sure that the buyer is taken care of as well by making sure that they're able to meet the closing costs or cash to close requirement also by the end of the transaction. So just like you were saying earlier, picking the right agent and right lender to work with and having a great team behind you um, can really make the home purchase an easy process, seamless, making sure the offer is structured properly, making sure the financing aspect is on point. I know somebody like Brooks will definitely have that done for you. We would love to help everybody here at Nine Line Realty as well. So really, Brooks, that's all I really have for you today. I wanted to thank you so much for joining me and answering some of these questions that a lot of people are having. And if you don't have anything else, Brooks, I think we're good to go here.
No, absolutely. This was a great time. Thanks for having me. And if any other questions come up, feel free to reach out.
Got it, got it. Again, everybody, this is Brooks Becker from Pioneer Mortgage Funding. Hopefully I'm saying that correctly this time. And I am Carmelo Pernesi with Nine Line Realty here in beautiful St. Petersburg, Florida. And thank you for watching.
Thank you.